So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. Welcome to Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them struggle with clarifying capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy is the best way to grow your wealth. I'm your host, Brett Swarts. Each episode, I'm joined by some of the best financial independents and passive income wealth advisors in the world, where they share their ideas, deal stories, and inspiration with us, so together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. Many real estate investors, they struggle with finding turnkey properties in growth markets. Our guest has hand selects investment real estate deals nationwide with a focus on cash flow markets. And we're going to talk about the difference between buyer's market, seller's market, and cash flow market here soon. He and his team have participated in the funding of more than 400 transactions per year and have recently achieved Inc. 5000's top 20% list as one of the fastest growing companies in America. Marco Santarelli, please welcome to the show.
Hey, Brett, it's great to be here, and I'm honored. This is going to be a lot of fun.
And by the way, you can find Marco at marcosantorelli.com, and he's also the founder of Norada Real Estate Investments, and that's at noradarealestate.com, just so you know, we get that out of the way right now. So, most important question, Marco, will you give our listeners a little bit about your story and your current focus?
Yeah, thanks. So the short version of my story is really, I bought my first rental property when I was 18. I've always been entrepreneurial as a teenager, and I knew I wanted to invest, and I knew I wanted to build a business, and that's pretty much what I've done for decades, through my life. But the writing was on the wall when I bought that first rental property. I fixed it up, and I leased it. I managed it myself. I basically did most of it by myself, which was a good thing for learning experience-wise, but it was a mistake in hindsight, because of what we teach today about building the right team around you. But I continued to invest over the years, and fast forward to 2003. This was after the dot-com crash in early 2000s. I had time on my hands. I was in a position to be flexible in my time, and I didn't want to go back into corporate America or have a job. So what I did is I went to this free 3-day real estate boot camp or seminar that was in Orange County, California. It was from a guy named Robert Allen, and a lot of your listeners might know who he is because he's authored many books and co-authored many books. So I went to this 3-day event, and it did two things for me. One, it got me back into real estate investing, and I did it. I wanted to do it full time, and I went into it full time. So I bought 84 units in 9 months in the course of 2004. So I built a very large portfolio very quickly. The second thing that happened is investors were coming to me early on saying, hey, can you mentor me? Can you coach me? Can you help me out? And I said, no, I don't have the time, nor do I have the interest, or at least at that time I didn't. But what I can do is I look at a lot of deals, and I have deal flow, so I can give you or assign over or sell you the deals that I don't take. And that's how the business was born. So really, the systems I created investing 2,000 miles away from Orange County, California, in states like Florida, Georgia, Michigan, became the business as it is today. It's basically the systems that I was using that now we help other people to build their real estate portfolios for free, because we don't charge for our services. And it's all about creating wealth and passive income. So here we are today.
Thank you for sharing. Now, in particular, your systems, being in Orange County, being able to go nationwide, from what I've been able to gather, and your research is excellent. You're able to really identify cash flow markets, as we touched on in the intro here. So would you walk our listeners through maybe how you go about doing that, and how maybe your systems are different, which gives that competitive advantage for investors?
Well, you're talking about two things. First of all, when we're talking about markets, what we look for and what we want in the markets that we provide investment properties in are two core things. There's more to this than what we have time for, I think, in the course of this episode. But it comes down to jobs or job growth within that market, and two is population growth. You want a healthy, robust economy. You want great diversity in the economy itself. So there's jobs in all the different sectors, or many different sectors, not just oil and gas or whatever it may be. And lastly, the numbers need to work. You can't be in a market like San Francisco, New York, or LA, where it's so unaffordable that properties are overpriced and very expensive, and they just don't rent for enough to give you a good rate of return. So you have to identify the right markets for investment purposes. The systems, that's just part of the whole system, but the system is just knowing where to look in terms of markets, what neighborhoods to be in, the types of properties and the numbers, the analysis on the numbers, having the right team around you for acquisitions, financing, property management, et cetera, et cetera. And if you put that all together, and I'm oversimplifying a little bit here, but if you put it all together and you just follow it like a recipe, it will work for you every single time, because it's like checking the boxes on a 2-page checklist. As long as you check all those boxes and you follow all the steps and you do your due diligence and your inspections and you verify information, you will be successful. It's hard not to be.
Excellent. Now, when you're building that team, you're looking for, specialists in that, either a contractor, or specialists in the lending, maybe title and escrow, maybe obviously realtors who are finding you those deals. Walk us through sort of your process for bringing on those individuals, especially if you're doing it nationwide in multiple states and multiple locations.
Yeah, so the team is critically important, and you want an acquisitions person, whether it's a real estate agent or broker, or a turnkey property provider like our company is, or someone else. And let me say something before I go down this list. I'm a big fan of, and what we talk about and preach, and even within our podcast, as you know, because you were on my show, we are big fans of passive real estate investing, not active real estate investing. What's the difference? If you're an active real estate investor, you're buying a distressed property or a property from a distressed seller. It needs work. It needs to be fixed up. It's kind of like watching those TV shows on HGTV. There's work to be done. You need to be actively involved. So you're putting up the money and or taking on the risk and or managing the crew and or being actively involved. It's more of a business or a job than it is actually investing. It's certainly not passive investing. The ultimate goal is to get to that point of passive investing. If you flip that around and you just start acquiring properties one or two at a time and building up your real estate portfolio, and all they do is put income into your pocket or money in your bank account every month, that's passive real estate investing. That's what we love. That's what we teach. That's what we help people do. So your team is essentially the acquisitions person that can provide you that inventory, the property manager that will manage those assets for you in each of the markets you have properties in. You need financing. You can buy these all cash, but we don't obviously advocate that. So you need your lenders that focus on non-owner occupied properties. And then, of course, you've got the people who are on the sidelines, like your asset protection attorney, your CPA or tax advisor, the title companies, the people who are handling the transactions, your property inspectors. You don't need a construction crew, and you don't need a general contractor in most cases, because, again, this is a passive, not an active approach. So that's the core team.
And then you establish those teams, obviously those relationships in the different cities or different states of where you're working, and obviously cultivate more deals as you build long-term relationships, which then you can leverage maybe to find even more opportunities. And it seems like what I've heard when I first started in the business is the longer you work in this business, the easier it becomes and the more money you make. But it definitely takes that initial 2 to 5 year building the teams, building your knowledge, getting the deal flow, right? Getting the track record established. So walk us through that first 12, 24, 36 months, not only as when you first did, but more so when you said, hey, I'm going to expand outside of my area, and maybe you bought those 84 units out of state already. I'm not sure. Walk us through, though, that initial start to full-time investor, 36 months, and what it took to get there.
Well, as a business, we already have all that taken care of because of the years of working with different service providers in every market. We've vetted them, and then we've worked with them, so we have the experience. So today it's easy because it's easy for you as an investor and a client of ours because we already have that in place. We've done the legwork and the heavy lifting. But back when I first started, I made almost every single mistake you could possibly make. I lost a lot of money, not just made money. I lost a lot of money. I got ripped off by people who were doing my management. They were, one of the real estate agents I was working with was also my property manager, and she stole $6,000 of collected rents from me. And I didn't have the checks and balances in place. So, you make all these different mistakes and you learn from that. And so the systems that were created were partly through just, thinking about it logically, having those, creating a framework to work within, having checks and balances. So that takes time. If you know what you're doing, you could do it right from the get-go, because especially today with the internet, you can look up service providers that you need. You can also look up their reputation, and you can vet people to a large degree online. And I don't put a ton of weight in references, because anybody who's going to give you references is going to give you their best references all the time. But you can look up certainly references and testimonials and put together the team. Also, if you find a great person, whether it be a real estate agent or a lender or whoever it may be in a particular market, usually those people who are well established and have a great reputation are able to refer other people that they work with to you, so you can build a team very quickly just from that one golden nugget person, because they're already working with the other people who are rock stars in the space.
The thoroughbreds are running with the thoroughbreds, right? And so if you find that one and you build a good relationship, you ask them who are already in that space, in that city, in that town, who have those relationships and have vetted those people. That's why they're working with them. And you can leverage that to expand the business. Marco, shifting a little bit. So you talked about systems, setting them up, adjusting along the way, right? Persevering through this. I'm curious, growing up, who was Marco before all of this real estate success and all of the mentoring, all of the podcasts, all of these deals? What gifts were you given, and how did they shape how you help others today?
Oh, that's an interesting question. I've never been asked that before. I was not born in a family of luxury or privilege. We didn't have a lot of money. My parents both worked. In fact, my mother had to work 2 jobs for many years just to make ends meet. So I didn't come from money. But one thing I recognized early on, and it's interesting you asked me this question, because I've actually been reflecting on my story and actually writing out my story. I just knew at a very early age that I wanted to be wealthy. And this probably was around 8 or 9 when it happened. But I made it my mission at the time to study everything and learn everything I could about business, investing, and money. And of course, within that realm included real estate. So I actually, as a young teenager, was buying and reading courses on business and real estate. And I was so nerdy. I was just nerding out on this stuff. But at 13, I was coding, developing games, in an effort to sell them. Never did. But at age 15, 16, I was listening to Tony Robbins. So I just took it upon myself to just grow as a person and get into personal development and learn what I could about the things that interested me. So I put myself on the path of wanting to be wealthy and learning about money. And the thing is you don't need to be young or old. You just need to have the interest and the passion to do so, and anybody can do it. And it's never too late, especially today with podcasts like yours and mine and all the free resources online and the books that are so inexpensive. There's no excuse not to educate yourself. In fact, that's my number 1 rule of my 10 rules of successful real estate investing, is to educate yourself. Because really, without the proper education, you are essentially doomed to follow other people's advice, and you don't even know if it's good or bad.
So well said, and so true, right? I mean, today's access to information and quality content from people who have been in the trenches like yourself, who have the scars and who've helped a lot of people succeed in real estate. There's really no excuse not to, right? Just to dive in. Okay, so we're going to shift a little bit more to the tactical now. So you're buying these turnkey properties in growth markets. You're making good returns for you and your investors, and you're growing at a rapid pace. Many of the investors that we work with are baby boomers, right? And they're looking for a more passive lifestyle as well, and or to supplement their income before they retire. And they're faced with highly appreciated assets such as primary homes, commercial real estate, or businesses, and they're looking for someone like yourself who specializes in commercial real estate where they can be passive, right? However, when they go to sell these highly appreciated assets, or even when you go to sell yours for your group, they're faced with the capital gains tax, somewhere between 30 and 50%. So I'm curious, what are some of the solutions you've used over the years to help either defer, eliminate capital gains tax and depreciation recapture?
The big one by far, without question, is always the 1031 exchange. There are other strategies out there like the DST, but most of the people that we talk to and deal with end up using a 1031 exchange to take what they own and move that equity tax-free into a larger portfolio in other markets that make more sense today than the market that they're in. I'll give you a great example. People who live in the coastal markets, especially the pricey ones, be it all of California, the coastal states, Seattle, New York, New Jersey, those people, I jokingly say they're equity rich and cash flow poor, but there's a lot of truth to that. So when you have real estate and you have all this equity and it's just sitting there, I call it dormant equity. Dormant as in the sense that it's pretty much dead. It's not generating a rate of return for you. But what if you could take that equity, you can move it out of harm's way, retain it all, put it into other markets and build a larger portfolio and increase your passive income dramatically in almost every case. You have all the upside, no downside, and you just have the ability to repurpose or rebalance your portfolio by taking that equity and putting it to work. The question is, why wouldn't you do that? When you realize what you could do and what you're sitting on, you're nuts not to actually do that.
Makes perfect sense. So walk us through a scenario. So let's imagine someone had a big old house or a business, or let's just keep it for the 1031 exchange, an investment real estate deal. It's highly appreciated. They're not getting as much cash on cash return. So what you're saying is they can sell that. They can 1031 maybe into one of your deals, one of your opportunities. Is that what are you helping them do that process, or walk us through how that works to maintain the tax deferral?
Yeah, so this is a grossly oversimplified example, but the math is simple, so it illustrates the power of it. Let's just say you have this single family home, you have $100,000 in equity in it. Again, I'm just oversimplifying to make the numbers and the math easy. Let's just say you can sell that property and take out $100,000 in net proceeds from that sale under a 1031 exchange, and turn that $100,000 in equity into easily 3, but let's just call it 4 single-family homes in a market like, let's say, Indianapolis or Memphis or Jacksonville or one of the 22 markets that we are in. And now, instead of having that one single-family home that's generating whatever, $200, $300, $400 a month in net passive income, what if you turned it into 4 single-family homes in 1 or 2 other markets, and now you've increased your passive income to, let's say, $800, $1,000, $1,200 a month. Well, you can 3x your passive income, retain the equity, diversify geographically, and build your portfolio. And if you pick markets that have strong cash flow and growth potential, guess what? You could probably do this again in 4, 5, 6, 7 years from now. You just do another 1031 on those properties or that portfolio you have and continue to leverage up and build. And that's how you accelerate your wealth. I mean, that's how you accumulate wealth and accelerate your cash flow and accelerate your growth, your wealth creation.
Excellent. And that's where your group comes in with Norada Investment Properties, where you've identified those, you've actually secured those, or they're under contract, and then that 1031 buyer can 1031 into alongside of you or by themselves. Or walk us through how that practically works with your company.
Well, we're working with people who are doing 1031 exchanges all the time. I mean, this is, it's a common class of customer that we have, especially today, because so many markets have appreciated so much and so fast that now those people who are educated in what I just said are able to come to us and say, hey, give us a hand. Okay, well, great. Talk to Brett. He can help you on the 1031 side, and, and doing the exchange or whatever the case may be. But then we help put them in the properties that we have available. And, we'll have anywhere from 100 to 200 properties available at any given time, from single family homes to duplexes to fourplexes, that they can 1031 exchange into. And so we're really just, a key core piece of that whole strategy that they're going to need. So we have pretty much everything that they would need. Of course, the 1031 or the DST pieces, we would have to work with guys like you, because we don't do that stuff. But when you and I work together, we've pretty much got all the pieces to the puzzle that they need to basically go from A to B and do it seamlessly and improve their situation. So there's no rocket science here. It's just a matter of having the right inventory in the right markets available. And we have a lot of it available all the time. It ebbs and flows, but it's always there.
Sounds great. Now, shifting a little bit, this part of the podcast, our goal is to bring on wealth advisors like yourself, and you're a wealth advisor for investment real estate and passive income. Now, that being said, not every wealth advisor, are in investment real estate or in passive income per se, So what would you want to share with the fellow folks who are maybe outside the industry or looking in or looking to maybe help their clients diversify beyond just the traditional investments? If there was either one mistake they're making or one thing that you should maybe try to implement, what would that advice be from you?
I got to be careful, I guess, of what I say. I've invested in virtually every asset class, from precious metals to cryptocurrency. So, it just spans the entire gamut. I would never say that one asset class is right for everybody, because we all have different needs and goals and, timing in life and all that good stuff. But I will say, and this does sound biased, but I can back it up with actual, justification and facts, that investment real estate or income producing real estate is by far the best investment that you can make. And it doesn't mean it should be the only investment that you make, but for me, it's going to be the bulk of my investment, my investment portfolio. And the reason for that is because, I'm kind of sharing this with other professionals. They may or may not know this, but the reality is that the benefits that are provided by investment real estate, when you accumulate in the aggregate, cannot be met by any other asset class. It used to be where there was a time where the best tax benefits came from oil and gas investments as a direct investor, being, accredited investor in a private placement. Well, that's no longer true. Now, real estate is the most tax favored asset class out there. So when you have the ability to have income, depreciation, the amortization of a loan, which increases your equity, the appreciation over time, which keeps it lockstep with inflation or more, and the fact that you could leverage 5 to 1, so I can put 20% down and own and control 100% of an asset. Show me another investment that can do that. You can't. It doesn't exist. So this is why I love real estate.
Yeah, I could agree with you more, Marco, and I appreciate you sharing that. And likewise, I personally have investments in the stock market and have dabbled in crypto, but investment real estate, I've found for myself and my clients, is the best risk-adjusted rates of returns, and plus you get the depreciation, which offsets the income, which increases the cash flow. Most of our clients are looking for that cash flow. They want some appreciation, but they really want to create and preserve wealth and get cash flow so they can free up their time and their energy, which leads us to our next question. What's the most rewarding part about what you do for your clients, beyond just the numbers we're talking about here and the returns? What is it that says, yeah, this is my why behind what I do? Maybe you want to share an inspirational story with one of your investors, anything that comes to mind on that.
Well, it's wrapped up in our mission. Our mission is to help 1 million people create wealth and passive income with real estate, because we want to help put people on the path to financial freedom. And one of the best and easiest ways to do that is to build a smart real estate investment portfolio. And so our mission is to help 1 million people, whether they do business with us or not. It's just to put out that information and the knowledge and the resources for other people to use to help put them on that same path, just like we do with so many other investors.
That's great. Yeah, and the why behind that too might be more time with their family, more time to
Yeah.
travel. You know, maybe don't have to work in that day job as long as they might have to if they otherwise just put it in traditional investments. Part of my strategy has been focused or shifting from putting anything in IRAs or 401ks from the past. And shifting to putting it all in investment real estate so that perhaps you have an extra 5 or 10 years to do what you want instead of maybe being forced to do what you have to do, because it's, again, most of the traditional tax deferral methods are 60 and above,
Yeah.
when you can start actually taking distributions without being hit. So yes, okay. So shifting a little bit again here as well, what are, if you had 3 things to share with the more novice investor, now the person who's actually been in real estate, is doing deals, given the current market conditions of, a lot of places are more of a seller's market. What are some of the, maybe some of the adjustments you're making with your outlook of the 2020 market, and perhaps what's some ways to maybe be in a more of a preserve your wealth versus create mode? What strategies are you encouraging others to take right now?
Well, I'm a firm believer that you have to, regardless of where you invest with real estate, cash flow is king, and cash flow is the glue that holds your deal together. So if you can choose to be in a very boring cash flow market and it's really strong for cash flow, and you'll just weather through any real estate cycle, any economic storm that may come our way, because people need a place to live. Or you could be on the other side of that spectrum where you are interested in growth. So you want appreciation, or what I say is appreciation potential, because you'll get it over time. But some markets are definitely prone to give you far more appreciation than other markets for many reasons, and usually centers around population growth. So regardless of what your strategy is, as long as you've got cash flow and a good cushion, so you've got a comfortable capitalization rate on that property, you can weather through the ebbs and flows of the market, whether it be the real estate market locally, and recessions on a national or even a global basis. So to me, that's the fundamental part of it, is to invest smart, be in a good market, in a good neighborhood, have positive cash flow, have the right team, like a management team. And for us, we love the BB plus A minus class neighborhoods, because we just know that they're typically good quality tenants. They have good jobs. They want good school districts. They tend to stay. They're not transient. They don't want to damage property. Just smart investing. We counsel and guide people and advise them on all the things we're talking about, and then some. But when you step back and you think about everything we've been talking about here, it just almost sounds like common sense. But when you just wrap it into a framework and a system that you can just follow, then that becomes the recipe. So, but yeah, I put cash flow high on that list. You want positive cash flow, because that's the cushion that allows you to ride through and sustain any kind of disruptions in the market.
Excellent. And debt to income ratios, and or how much debt you're taking on a loan to value. Do you kind of have a rule of thumb with, we don't want to take on more than 50% debt or 60%, 70%? I know every deal is probably a little bit different, but are you pulling back a little bit and saying, let's put a little bit more of a down payment just in case we have a downturn, or any shifts on how much leverage you're taking on deals?
Well, the minimum you can put down is 20% anyway with conventional financing and most portfolio loans. So you're always going to have your 20% equity, your equity in the deal. But keep in mind, prices are fluctuating all the time. Properties can appreciate and depreciate. But if your cash flow stays relatively consistent, it goes up over time, because rents go up over time. They also keep pace with inflation, if not more so. In many of the markets we've seen it, outpace inflation by a long shot. As long as you've got, like I said before, good positive cash flow on your properties, that's really the stronger indicator of your sustainability. It's not the price, because market prices fluctuate all the time. They'll go up and they'll go down. So what if you buy a $100,000 property and it depreciates to $90,000, but it's still generating $1,000 a month gross, whatever, 300 net? to me, it doesn't matter whether that property becomes $90,000 for, a year or two, and then goes back up to 100 and then 110,000. I survived through the price changes of that market because I've got that cash flow. And this is why I keep harping on this so much is the sustainability of your investments are based upon your ability to not have to feed the monster all the time. If you're putting money in your pocket, you're in good shape. If you're pulling money out of your pocket just to maintain and keep your investments, that's not a good thing. So you want good markets and good, smart, prudent investments, but you want the positive cash flow as the overarching glue that holds it all together.
Makes sense. Yeah, cash flow is king. Not necessarily cash is king, or even appreciation is king. It's truly the cash flow to sustain you in growth markets or down markets or side markets. Excellent. Last question. How do you stay centered in your values and keep from becoming discouraged? Let me give you some context for this. So a lot of our listeners are business professionals, real estate investors. There's a lot of negativity, whether it be in the news or the marketplace. There's a lot of moving parts right now with where the pace of information. So first part is, how do you stay centered in your values? And the second part is, how do you keep from becoming discouraged when things perhaps don't go as well as you had hoped?
Well, your second question is just have clear, specific goals. You want your goals to be specific, measurable, attainable, realistic, and a timestamp on it. And if your goals are inspiring, you'll stay the course and stay on track. I break my goals down into, business goals, investment goals, family goals, fun goals, health goals, and I'm missing one in there. There's another category. So if you have at least one goal in each of those categories, and it inspires you and it keeps you on track, and it feels just far enough out of reach but attainable, that helps to keep you on track. The values is something just deep within you. You just have to know who you are and be clear of what is important to you, what you love, be it family, faith, health, wealth, those things that are important to you. You just have to know. And if you don't know, you need to maybe step back and go on a spiritual journey to figure it out. But once you get clear on that, you'll just feel good every day. I mean, you just wake up in the morning and, smile on your face and you're ready to rock the day. So I guess the way to stay centered is just to be clear and know what your values are.
That's great. No, thanks for sharing that wisdom and that encouragement. Any last thoughts to leave for the listeners? And as a reminder, you can find Marco at marcosantarelli.com, Norada Investments.com. Maybe correct that if that's off.
I'll correct you on both of those, actually.
NoradaRealEstate.com. He also recently has, of course, he has his podcast as well. You want to share about that. And then you've released a video series, educational series on how to help people invest in investment real estate. You want to try to plug that real quick, Marco?
Yeah, actually, I'll do one better. Just simple to remember: passive real estate investing. That phrase. It's the website passiverealestateinvesting.com. That's the home of our podcast, and it's the sister website to noradarealestate.com, where we have all our properties. And on both of those websites, we have a free download. It's a 40-some page primer on everything we've talked about and then some. It's called The Ultimate Guide to Passive Real Estate Investing. If you download that free report or that guide, you will be put on a list to get a copy of the book that is coming out in January for free. And it's an actual book. It's the full enchilada. So that's part of the whole mission of helping 1 million people is to give away, the book.
Absolutely. I think if you can help enough people get what they want, you can have everything you want. A gentleman named Zig Ziglar said that one time. So, hey, I appreciate all your generosity with us today, with your time and your wisdom. As always, I want to thank our listeners for listening to another episode of Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy is the best way to grow your wealth. I encourage you to reach out to Marco, check out his content and his solutions for doing just that.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.